My channel. So today I am going to explain price action for Reliance, HDFC and ICICI Bank. We'll start with the TradingView website and I'm going to set the time frame for 4 hours, and then from 4 hours we are going to compare the price action for May month, June month and July month for finding a strong support and resistance. We'll start with Reliance. So as earlier I have explained, May month it went sideways where the high was about 1470 and the low it went up till 1380. So the maximum decay was observed in the May month. But the June month, due to the positions getting profit booking on the call writing side, we could see a very good breakout. But then the breakout didn't sustain because with July month we had results for Reliance. Q1 results were bad, so you could see at one strike almost 50 points down. That was the 3% to 3.5% fall for Reliance in 1 week. So this was actually based on two news. One was that Q1 results were not good, another one was the Trump tariff news, which has affected the market very well. But now market has again back to the same May month support. So the break of a structure should happen here and runs should take support from 1390 and it can go up to 1450. So we are checking HDFC now. HDFC is pretty good. So July month was the sideways month where the maximum premium decay has happened for HDFC because the 2000 mark, which was a very good resistance, has now turned into support. So you could see May month it was trending while Reliance was very sideways, and June month because of the results it also drifted down by 3%. July month pretty consistent, already had collected too much of profit booking and the SL zone here, which would help cross 2050 this August. Okay, I'm expecting at least 30 to 40% up because HDFC is at a very strong support of 70. So let's check the ICICI. So as of now Reliance was going down and at its support. HDFC is in retracement phase while ICICI is coming down because of its news in the US tariff, because USA companies or Indian companies are extremely dependent upon ICICI Bank, because now only one bank which is on the top who is lending their premium or amounts to all the corporate sector is ICICI, while HDFC is completely into the domestic sector. We can see ICICI is definitely going to beat HDFC under that situation because of the HDFC Bank and HDFC merger. The Q1 results are not good for HDFC, while ICICI, though it has a bad news, the Q1 results has given us a breakout zone here. So now the current resistance is 1500, but you could see the call writers are already being added in ICICI. This shows that by August last week there can be a breakout structure in the ICICI Bank. Now for more confirmation we will go into the OI. So I'm going to split the OI into total OI as well as the weekly structure we can observe. First one we are going to check is the monthly OI for Reliance. So the website I'm going to take here is Trading Tick, which is going to slice between the monthly OI as well as the weekly positions. Let me select Reliance here. So this is the OI distribution chart where you could see clearly the call writers are on the top. So resistance is very heavy in Reliance. So the May month support might break next week, and as of today it was a complete sideways premium. As you could see, the open was high and the close was low in the chart. Okay, next we are going to move to HDFC Bank, which is at its critical support 2000. So 2000 plus or minus 30 is the range for HDFC Bank, and OI is also pretty good, supporting the buyers. That means the breakout can come anytime in HDFC Bank. So Reliance and HDFC are completely opposite to each other. So Nifty having the greatest composition of these two stocks, I think Nifty is going to be sideways. Let's check ICICI Bank. So ICICI Bank, as you could see, it was sideways, so good premium decay in the straddle structure. But when you see, the resistance is more. To be precise, market was moving from 10:50 a.m. to 10:30, and the premium was against the sellers, but after that it became stabilized. So up to 3:15 the OI has been maintained very well in the straight structure. So equal buildup has been shown here in call side as well as the put side. When we are going to check the ITM of the close range, let's go for Reliance. So here I'm going to take the close plus or minus 10 strikes above and below. Here when you check the OTM, so it is 57 versus 20. So strong call writing is been built for August first week in Reliance. This shows that market is going to face resistance at 1400. So that is the expected range for Reliance, and the lot size is 500. Okay, next we have HDFC Bank. So HDFC Bank, when you check the OTM, it is 25 versus 12. So call writing has been done for the first week, but the price action shows the consolidation phase here. So some profit booking in the OTM is happening, as you could see in the put side, which is keeping the market stabilized in that positions. So decent positions are added in the OTM and ITM in the call side premium as well, and the lot size is 550. Max pain is 2000. As I told you, 2000 is going to be the deciding factor for HDFC. Once 2000 is crossed, 2050 is the next resistance zone for HDFC Bank. That is the max pain as well. Okay, now we are going to check the ICICI Bank. So the data which is shown here is for 3:15 p.m. to 3:30 p.m. where the OTM buildup actually for today is 2K and 1K on each side. So 18 versus 9. So slowly call writers are added in the positions, as you could see here in the build-up area, while put buying is happening just to keep market down from the 1450, which is going to be the very good resistance for ICICI Bank. Now we will do a small straddle calculation. I'll show you how to calculate the premium with respect to price action. So I'm going to keep side by side price action as well as our straddle chart. So first I'm going to check for Reliance. Lot size is 500 for Reliance in the futures category. So to be precise, I'll take Reliance here. So when you check Reliance chart pattern, from 9:25 up till 11:55, you can see the price action was drifting down. But then after 1:15 up till 3:05, you could see it went sideways where the maximum premium decay has happened. So open is definitely high and close is down. So under this condition, when you check the straddle, we'll take the open strike price. The 9:15 candle is 1410. So I have to improve the count. The step count for Reliance is 10 points, HDFC is 20 points, ICICI is 10 points. So you could see how market from 56 it went to 57. So it is a loss making trade for straddle sellers. When you check the loss, so it is a minus decay of 1 point, and the lot size, one lot for Reliance for futures category is 500. So today's loss for Reliance straddle sellers would be plus or minus 500. So For one lot it is 500, means for 10 lot it is 5k. So that's how you calculate the loss or profit for straddle sellers category. Next we will move to HDFC Bank. In the same pattern you can calculate whether it was a profitable trade or loss trade for HDFC Bank in the options category. When you check the HDFC price action, it was pretty good and it was stabilizing, and the markets were trading below previous close, where previous close, yesterday's 315 candle, acts as the very good resistance. And you could see the price action. Open for HDFC Bank was 1980 and it was a profitable trade. So Reliance was showing the negative trade and HDFC was a profitable trade. When you check with ICICI Bank, ICICI was pretty strong with its resistance because the price was down previous close, 315 candle. As you could see, 1450 has been our strong resistance for this first week of August. When you check the open was 1450, which acts as a resistance, and markets were going down from 47 to 43. So this is also a profitable trade. So that's it guys. Thank you.